think I have spoken everything I had to concerning structure. If you have not yet watched the videos, I really recommend you visit the previous videos so that you can just check them out, see if they can be some sort of useful to you. Now, today I want to speak, this is part 6 of this series. I don't know how many videos this is going to be consisting of, but I'm just going to make them available here on YouTube and on my Telegram channel. I'll leave the link in the description. And the only thing I request from you, if you want to, is to just subscribe to the channel. And if this information is being useful to you, then you might want to turn on that bell. So just you get notified whenever we have this grace of uploading more, you just be notified. This is an entry, I just took it. It's still based on the structure and all that stuff, but we don't want to focus on this for now. We want to go back to the chart that we've always been looking at on this series, which is V75S. I never meant to say that this will only apply on V75S, or the fact that I always use this for V75S does not necessarily mean that you can only apply this on V75S. You can actually apply this on V50S, V50 step index. It doesn't matter. You can even apply this on currency pairs, but there are other things that you now need to take into consideration if you're trading in the Forex market, like timing, sessions, and all that stuff, which are things that we always forgo when it comes to synthetic indices, because these are not aligned with time. These are aligned with something like an algorithm, I should put it that way. I really don't know what moves this market, but I know price action. Believe me, if you know price action, a lot of detail might not be so much useful to you. So we want to go back to the chart that we've always looked into. It was a 4-hour, and we want to look into the same concepts that we've always focused on. I remember this was the first structure that we were looking into, and this was its invalidation. Not necessarily, it was right here. This was its invalidation, it was right here. Perfect. And I also want to pay attention to this, the other invalidation. What was it? I don't remember, but I also remember having had focused on something like this for you guys. It was this entry right here. I think I picked it. So what we're gonna do, we're just gonna drop this to some lower time frame. No, not some lower, this is some historical data. Yes, it was right here. I knew what I'm talking about. It was right at this some form of structure right here, which was then broken. There was an invalidation for this entry. I just don't remember where exactly or in which time frame, but what I just want to focus on is concerning these areas. So it does not matter where it's coming from, it does not matter what type of structure it follows. You guys know the structure now. So if you don't know the structure, just go back to the previous videos and just take a look at those so that we can be aligned as we speak. We also had this invalidation right here, and it was centered on this structure right here. So we want to pay attention to some zones. First of all, I want to focus on this zone right here. I also want to focus on this zone right here. And lastly, I want us to focus on this zone right here on a smaller time frame, so that we can just take a look at some pattern. Because I had a question in my inbox that says, so when it gets to the zone, does it mean that we're already buying? Oh yes, it means that, but for the sake of confirmation, there's a couple of things that we might need to see, because we cannot base our trade on the fact that we are going to take a buy on a 4-hour chart, then the 50% of maybe this whole drop is going to be our risk. It does not necessarily, it could work like that, but most of our accounts will not be able to sustain that loss if in case it goes into a loss. So what we want to do, we just want to drop down to some lower time frame and pay attention to how does this actually look like on a lower time frame. How does it feel like? How does it look like? What are you supposed to see before you take the decision of either buying and selling? And if in case you do take that decision, what are you targeting? What are your confirmations? What are you targeting? How much in terms of pips or in terms of movement? But I think that's an easy question to answer, because you're just targeting the next structural high or structural low. It's that simple. Fine. If you remember from all my series, this was that structural entries. All the videos that I've ever posted on this YouTube, I've always taken into consideration this type of a pattern, and I will try to explain what it actually means. This type of a pattern. These are the zones in which you now want to see it. I've always focused on this type of a pattern. Before I actually focus on the pattern, I would like to explain to you what it actually means and what are the variations of this pattern. The first variation would be a drop that looks like this. What does this mean? What this means to me is, normally it does not start from here, it starts from somewhere. So if I have been having a series of lower highs and lower lows and lower highs and lower lows, then suddenly I'm starting to have a high, a low that is higher than the previous. As you can see that this is actually here and this is actually here, so it means that this low is a little bit higher than this one. This has a lot to do with market volume, as in the market is starting to fail to create lows that are lower than the previous. Remember, I said if we still have strong breaks, it means there is hope that I'm still going down. So you could consider this as no hope of continuing to go down. And we want to give it a confluence of being at a certain spot of some invalidation or a structure which is coming from a higher time frame. So when you start seeing this, normally you'd want to see small candles. You'd want to see here a small candle. It could be small black candle or bearish candle, followed by a huge bullish candle. Now, when you start seeing situations like this, and it does this, it normally comes here. If it fails, it will close those gaps of insufficiency that we spoke about the other time. So this situation right here is what you want to see here. Just to take an entry. On a sell setup, it's just the same. This situation here, you just want the inverse of it right here. And you want to see the inverse of this situation somewhere around here. Either it's going to come back to this change in state, or it's just going to fill the gap, then it goes all the way up. Now, this is why I also recommend pending orders. Those pending orders will have you saved a lot of risk management and a lot of watch time if you follow them, but there is a specific way of how you then program your stop loss when you use those ones. Now, if we have a situation like this, in terms of drawings, that is where you now want to see it happening. I want to pay attention to this area first before I go, because that's where we're looking at. Look at it. Look at it. You start seeing that black candle and a strong movement. Now, if you pay attention to this area, you're going to see this. You will see this. Those gaps now, they're now coming for refill. And if you need confirmation, you could buy here. If you need confirmation, but I don't want to lie to you, your risk is going to be 50% of this draw, of this downside here, of whatever that insufficient was. I just like, for the sake of safety, if this is the drop that I'm dealing with, I'm just going to take 50% of this drop right here. If it's from here all the way up to here, I'm just going to take like 50% of it. There are tools that you can use to measure. One of it is the debt range. It's available on TradingView. It's just a tool called the debt range. You just drag it all the way. It gives you a line. In fact, let me do it for you so that it makes some sort of sense to someone here. This debt range right here, you just drop it like this. You drop it to the previous low. Then where you get that line is where you're going to put this line. And that's where your stop loss lies. So if I go back, this is where your stop loss stays. If your entry is here and you drop all the way down here, it means it's invalidated. In fact, even if it does not sound like that to you, the fact that it's already dropped like this, whatever the block that you had marked right here becomes an invalidation to the low. So it means this has been invalidated. You don't trade it anymore. The same applies. I don't see a difference between this area and this area. If you pay attention to whatever we're looking for, black candle and you have a rampant movement to the upside, normally it breaks structure, but it doesn't matter because it has already done that for us to then consider this area here as our point of invalidation. The gap that we always focus on right there. And you have a what? 50% of this drop as your what? As our risk. You will see this always as sort of like confirmation on a lower time frame. You could see it on 1 minute and stuff. But pending orders are always the way to go if you want that sniper entry, and just focus on the 50% of this, whatever the drop down that you're gonna be getting. It's very difficult to go through drawdowns when you are trading using this market structure series, because we try to get the nicest entries as possible. These two entries focused on. We also want to focus on that other part. If you pay attention, you see the very same structure, you see the very same thing right here. The only difference here is that gap was not provided, but still the pattern was actually given as it's supposed to. In fact, if you dropped even to a lower time frame, I would like to drop to a 15-minute time frame, you see situations that looks like the way V75 is looking like right now, but unfortunately these are going to be recorded videos, so I cannot take you there, or by the time you'll be watching this video, it won't be there anymore. But look at the situation that I'm talking about. You have it right here. You see it breaking that structure and just coming back to fill a specific gap, or that area which was a gap on a 1 hour. If you see again, just the same setup, breaks some sort of like structure, drops all the way to come back and fill that gap, and you go. And it will always do that. This is what you need to be looking for on a lower time frame. If you take your buy right here, it goes all the way up and you see it coming back. You really don't have to panic. It goes all the way up. You may now move your entries, your stop loss to your entries or to some break even. Why? Because you know that that pattern that you're anticipating has been given. Sometimes you might have a pattern that looks something like this, but we cannot really predetermine what's here because I did not focus on this area on a higher time frame. But for the sake of just knowing, these are the type of pattern, a return to structure. Because this is a structural high, drop, and we see market price coming back to that structural high. Return to structure, it's nice. You take 50% of all this down or all this upward movement right here. That would be your risk, and you have your entries right there. On illustrations, it will look something like this. This is a return to structure. It's also a perfect area. It could be called a sorcery test, or it doesn't matter. Normally, I would determine this. You'd see this structure definition right here being broken through, and you see market price going slowly towards that area. That's where you actually take your sales. You risk 50% of this, then you just drop low. These are safest entries. You find few of these because they happen at the utmost of the chart, but they're very safe. They're very good entries, very safe. Sometimes you can have an extended like this, but this extension should have candles that are not necessarily closing above these previous highs, right? These candles should not now close above, or they should give you some reversal pattern above this area right here, because it's extended pattern. If it breaks, you want hopes that it's going high, but if it breaks but in a non-satisfactory way, which we explained in part 4, or is it part 5 of the series, now you might want to see some reversal behavior above this high right here. This is an extended retest like this right here. If you look at this, this is an example of an extended all the way up, and then it fires all the way up, then drops down. Because remember, if it breaks up, we have hopes that it's going up, but the way it is broken also counts. Either candles are not going to close above, or they're going to give some reversal behaviors towards that area. If you pay attention to this zone right here, I don't know what's here. I'm saying considering the fact that we have a specific zone of attention on a higher time frame, maybe it's invalidation or it's structural retest or what. I'm just looking into patterns because we are assuming that everything that we've done in a higher time frame is already gone and it follows. Now you start looking for specific confirmation patterns, regardless of you using or not using. You look for confirmation patterns either for entries or for trade management, because you don't want to enter and forget. You want to manage your trade. You want to manage where you take your stop loss to some break even. You want to manage where you actually do these things. So basically, that is it. let's focus on this extended. You have it right here, and some reversal behaviors are starting to happen here. We have some reversal behaviors starting to happen right here. And market open a trade right here, forces all the way downward, breaking in structure. So it means that this is just an extended pattern, an extended retest of whatever. If it's a structure, if it's invalidation, whatever it is, it does not really matter what's going on. Give me a minute. Okay, perfect. So we have it right there and so forth. So basically that is most of it for this video. I will leave the links in the description below, and I'll be happy if you just like, subscribe, and if you have any sort of questions, they can be commented left below so that we see how long these series are gonna be going. And peace, and see you next time.